Hey folks, Dan Frio here with your market update for March 31st, 2025. So what we're focusing in on today are these things right through here, and the data that we're going to go over is right through here. We have the MBS markets. It was up 6 ticks. Now it's only up 1 tick. We have the equity markets kind of getting in the red across the board. The NASDAQ is down over 300 points. And right over my head is the VIX. Think of the VIX is the blood pressure of Wall Street. It's up over 23 ticks. That means their blood pressure is pretty high right now. So how's all this going to play a role in today's news? Well, that's what we're going to talk about today. So my name is Dan Frio. I actually do these videos twice a day to help you keep informed with these things right through here. So what I do for a living is I'm actually a mortgage loan officer. I'd love to be able to work with you if you're looking to buy or refinance your home. The cool thing is I'm licensed in all 50 states. And our slogan is one application, one credit pool. We're going to shop your loan to over 30 different lenders. Now, how would we do that? I'm going to give you all my information at the end of this video. You'll find it very interesting. So let's get over to what we have in the news today. So the MBS market is up 2 ticks. That means mortgage rates, well, they're not going to do anything right now. We have the Dow Jones and the equity markets kind of getting in the red today. But the big news right now we have is first quarter GDP growth will be just 0.3%. Tariffs stoke stagflation conditions, says the CNBC survey. So what does all this mean? Well, that's what we're going to focus in on today's topic. So what we have right now is the headlines for the economic calendar for the week. There's really nothing out today. There's a JOLT index tomorrow. That's job openings and labor transfers. Then on Wednesday is the ADP payroll numbers. I'm really not excited about those because they have way too many adjustments and they're off the mark most of the time. So we're really going to focus in on is Thursday and Friday. We have really the jobs numbers, the wage growth, and everything else. So not much news coming in until Thursday and Friday. So until then, we're going to focus in on the data that's what the Federal Reserve focuses in on. So let's get over to it. So mortgage rates, they inched down a little bit the other day. Right now, the bond market is up 4 ticks. What does this mean? Well, we focus in on this channel with right through here because we want to know what's going on with mortgage rates. So to do that, we don't watch the 10-year Treasury like a lot of people do. We watch actually the mortgage bond right up through there. See, it says MBS. That's a mortgage bond. It's actually it's on Wall Street. You might even have this in your portfolio. What you have to understand is what this is doing. So if this is the price of the bond right up through here, okay? So if the price of the bond goes up, that means rates are going to come down. If the price of the bond goes down, it means rates are going to go up. There's an inverse relationship. The bigger the number, the bigger the adjustment. So right now with the MBS up 2, means mortgage rates are going down a little bit. Not going to go down that much, but at least they're not going up. We go over to the stock market and everything's getting hammered right now. Why? It's still the tariff news. Well, we don't really have the solid tariff news coming out until the 2nd, which is Wednesday. So why go into all this stuff? Let's see how it rolls out, and then let's see how it transpires from there. Everybody is guessing, and the word there is guessing. Nobody really knows what's going to happen. Even Trump in his administration, one day it's this, one day it's that. So let's just focus in on what gets rolled out and how it transpires through the economy. And then from there, we'll focus in on. So at the latter part of this video, I'm going to give you my short-term, my mid-term, and my long-term outlook for mortgage rates. But today I want to go over just some of the headlines that are taking the effect right now. So one of the big pieces of the information you're getting right now is also saying first quarter GDP growth will be just 0.3%. as tariffs stoke stagflation conditions. So what is stagflation? Well, there's inflation and then there's stagflation. I did a video last week saying, the definition of what stagflation is. It just means high inflation with just a stagnant economy. You don't have any really GDP growth, but you have inflation. Well, that's what we're seeing right now. So is it going to come to fruition? Is it just scare tactics or people just, using it for clickbait? I think that's what's going on right now, because if you analyze, economists all over the country, and that they're going to tell you really, if it comes down to it, we don't know. We don't know what the administration is going to do, but once it comes out and they tell us and it goes into effect, we can actually monitor it and see how it's working. So here's my projections on where I think things are going to be short-term, mid-term, and long-term based on this information. Because again, we don't have any information coming out today. The latter part of the information is coming out on the labor market the latter part of this week. So here's my expectations. I'm thinking mortgage rates are going to stay stagnant right through this range, 6.75, between 6.7, 6.8, right around there, until something kicks us to another level. What that next level is going to be, Are the tariffs going to freak out the market even more, pushing rates up higher? Could we hit 7% again? That's a probability. Or are tariffs going to be like, okay, that wasn't as bad as we thought, and then it's going to stoke, possibly lower rates. That, along with Doge cuts and the government efficiencies and so forth, my long-term projections are these things are going to be about 6.5 by the end of the year. Between now and then, it's just going to kind of be floating. I don't think we're going to get up to 7% again, unless we're just some anomaly that's going on. I think we're going to stay steady right through here and have a tendency of going down a little bit. But any bad news is projected to make that rate go up quicker and higher, better odds than it going down much lower. So basically this way, bad news is going to make rates spike up quicker and higher. Good news is going to just have rates kind of trickle down. So if you're looking to maybe buy in this market, might be a good time to do that. If you're looking to refinance, I think mortgage rates are going to stay kind of steady right here. This might be a good entry point for you to kick some of the numbers on to see if refinancing makes sense to you. And I'll have all that information at the end of this video and how to reach me and how to use mortgage calculators and things like that to make try to make sense of, does it make sense to you to refinance, and what is my mortgage payment if I'm looking to buy my first house? So let's get over to my website so I can go over all that data with you. So my website is right through here, and I'm going to go also over when I have that slogan, one application, one credit pool, we're going to shop your loan over 30 different lenders. Now, how do we do that? Well, let's first go to the rateupdate.com. There's many things here that you're going to use. One is putting in your application. If you want to put in your application for me to help you navigate that home purchase market or refinance market, I'd love to help. Why use me? Well, I'm licensed in all 50 states as well as Puerto Rico, so I have the ability to help you. Now, do we have the programs? Well, here's the unique thing. That 30 thing I was talking about, one application with 30 lenders. I work at a federal bank, which is cool enough because I'm licensed in all 50 states as well as Puerto Rico. Here's the even cooler thing. This is one of only maybe a handful of banks in the whole country that do this. We're set up with 30 other banks, lenders, mortgage companies. So by offering you an application right through here, we're going to shop your loan with my bank and the 33 other lenders that we're working with at this time. And I'll be your loan officer through this entire process. So how do you get going? Just go to the rateupdate.com. You can click the Apply Now button, or you can schedule a consultation call with me. It's right through here. There's many mortgage calculators right through here. If you want to compare rent versus buy, you can do that. If you want to look at refinancing, does refinancing make sense for you? Or what would be my payment if I'm looking to buy a house at this price range and so forth? You're going to have mortgage calculators all over this website right through here. But if you're going down through here, what you can also do is if you are a homeowner right now and you want me to track the rates for you, we have a rate tracker right here. It's called RateWatch. If you're a current homeowner right now and you're, say, it's 7.5%, 8% interest rates, and you're like, Dan, if it hits 6.5%, I'm all in. Please reach out to me when it does. We'll go to the RateWatch tool right through here, put in your information, and when rates hit that entry point that you're looking for, I'll get you on the phone and we'll get the numbers starting to work. Or if you want to scroll down to the bottom of the website, you can do this as well. You can find our 800 number as well as my email address. Our 800 number is 844-775-5626, or you can reach me personally at dan@therateupdate.com. Yes, folks, this is me. So please give me your information. Give me your contact information as well. I'd love to call you back, answer that question for you, or any other questions that you have. So thanks for watching this morning, folks. God bless. Have a fantastic afternoon. I'll be here at the closing bell to let you know how all this goes. So far, so good. Looks like rates are going to stay steady right through here. They're not going up, but they're not going down. MBSs are down or up 4 ticks. Means it's a stagnant market so far today, folks. Can't wait to see you here at the closing bell. Let's see how this ends the day. Thanks for watching. God bless. See you soon. Bye-bye.